This is not breaking news. This is not a scandal. This is not about one person. What you're about to hear is something far quieter, but far more dangerous. Something unfolding in slow motion beneath the surface, where no headlines scream. For decades, the global financial system has rested on one fragile assumption, that the most powerful nation in the world can always pay its debts, that its bond market would remain stable, safe, untouchable. But that assumption is breaking, and it's breaking now. The second largest economy in the world has made a decision that could change everything, a decision that's already been set into motion, a decision that will cost billions and could cost us all. Stay with me. This isn't a drill. This is just the beginning. Let's break this down. What's really happening here? It's not about China's debt holdings. It's not about interest rates or bonds. It's about control. The financial system, the one that keeps the world's economies ticking, is no longer controlled by the old rules. It's controlled by forces that aren't about money alone. It's not about profits. It's about leverage, power, and survival. Who controls debt controls the game. For years, the United States had China locked in as its biggest buyer of debt. China bought U.S. Treasury bonds, keeping U.S. interest rates low, keeping trade flowing smoothly. But that relationship has fundamentally shifted. The real question isn't why China is selling. The real question is who's taking over that role now? And what will happen when no one is left to buy? This shift didn't happen overnight. It's a slow burn. And that's the most dangerous part. If you were paying attention, you'd notice that things started to change years ago in ways that seemed minor at the time. A small shift here, a quiet decision there. But now, those small changes have built up to something massive. Remember when China's bond holdings peaked in 2013? $1.32 trillion at the time. A symbol of global economic interdependence, a closed loop of trade and finance that seemed unbreakable. But here's the reality. China has sold off nearly half of that, over $600 billion gone, vanished in the last few years. But it's not just the amount that matters. It's when they're selling. In the middle of a bond market crash, that's not a market decision. That's a strategic move. So what's changed? And why now? Look at what just happened. In October alone, China dumped $12 billion in U.S. Treasuries. And that's just 1 month. This isn't just a sell-off. This is a signal that China sees something the rest of the world doesn't want to acknowledge. That the U.S. Treasury bond, once considered the safest asset in the world, is no longer a safe bet. And here's the kicker. They're selling even though they're losing money. In the financial world, you don't sell for a loss unless you're in deep trouble, unless you're preparing for something catastrophic. So why is China doing this? What do they know that we don't? The answer might be simpler than we think. Let's break this down further. China isn't in a financial crisis. They're not selling because they need cash right now. They're selling because they see something worse on the horizon. Here's how it works. When China buys U.S. Treasuries, they hold debt in exchange for dollars they can use to fuel their economy. But now they're looking at the U.S. Treasury bond, and they don't see an asset. They see a ticking time bomb. They learned this the hard way in 2022 when Russia's foreign exchange reserves were frozen. Overnight, $300 billion disappeared, gone, just like that. And China saw the writing on the wall. If we ever make a move on Taiwan or the South China Sea heats up, our assets in the U.S. are not assets anymore. They're targets. So China is liquidating at a loss, not because they're desperate, but because they're making a strategic decision, and that decision could reshape the global economy. This is where things get even more urgent. China's not alone in this game. As they pull out, the rest of the world is being forced to step in. But not because they want to, they're being cornered into it. Take a look at the data. The UK, Belgium, they're stepping in, buying up U.S. Treasuries like there's no tomorrow. But here's the problem. Neither of them has the financial muscle to do this without borrowing heavily. The UK, for instance, is already running a trade deficit. And yet, here they are, buying U.S. debt at record levels. The UK's balance sheet is being stretched to its breaking point. And Belgium, a small country with a banking system that's not exactly built to absorb this kind of risk. So why are they doing it? Because if they don't, the whole U.S. bond market could collapse. The U.S. is holding its allies hostage, and it's only a matter of time before they can't hold on anymore. This is where you come in, because this isn't just about markets. This is about your future. When China sells off its U.S. debt, they're not just moving numbers around. They're creating an earthquake in the global financial system. And that earthquake will shake everyone. It will hit you. What does this mean for you? It means higher interest rates. It means skyrocketing mortgage payments. It means job losses, bankruptcies, and a potential collapse of the financial system as we know it. You're watching the financial backbone of the world slowly disintegrate. And when it breaks, the shockwave will affect everything you know. This isn't abstract. This is real, and it's coming for you. It's not just your future at stake. When China dumps its debt, the ripple effects don't stop at the U.S. borders. They spread across the globe. The U.S. bond market isn't just a U.S. issue, it's the foundation of global finance. When it cracks, everyone feels it. The United Kingdom, Europe, they're already struggling. The UK's financial system is being stretched thin. Belgium, a small country, is acting as a proxy for global central banks. And that's only the beginning. The world's financial system is built on the U.S. dollar. But what happens when the dollar is no longer the safe haven? What happens when the very asset that backs the global economy is in free fall? This is no longer a localized problem. It's a global one. And right now, the world is scrambling to keep things together. But how long can it last? So where does this all lead? What happens next? There are three paths we could take from here. Asterisk, asterisk, adjustment, asterisk, asterisk. The U.S. and its allies somehow manage to stabilize things. The system shifts, but it doesn't break. Debt markets find new buyers, and the world keeps turning, albeit with much higher risks and costs. Erosion. The global economy starts to weaken, slowly at first. The U.S. bond market continues to destabilize, dragging down the financial system. Interest rates rise, inflation spikes, and the effects ripple through every economy. The core of the system begins to crumble. Rupture. The system fractures entirely. The U.S. dollar loses its position as the global reserve currency. Countries begin to abandon U.S. debt, and the consequences are devastating. A new financial order takes shape, and it's nothing like what we've known. Which one of these paths will we walk down? No one knows for sure. But the clock is ticking. We don't know what happens next. But we do know this. The financial system as we've known it is unraveling, and it's happening in slow motion, but the momentum is undeniable. China has made its move. The U.S. allies are scrambling to absorb the damage. But this is far from over. The U.S. Treasury bond is no longer the safe bet it once was. It's a political weapon now, a liability. And when the system finally breaks, when the financial infrastructure that's held the world together for decades falls apart, we'll be left holding the pieces. The question is, will you be ready? The world is changing fast. Don't wait until it's too late. Stay informed, stay alert, and understand that the rules are changing. This is just the beginning.